Tips in a bit. Before that, SEBI released a consultation paper this week about what's happening with the mutual fund industry and the total expense ratio and all of that. Prashant, tell me frankly, did you read the whole paper?
From fitness and whatnot to, boring TER and expense ratios.
That was a great segue.
But I did read it. I read it yesterday and I went to sleep at about 1 or so. It was a long 40-page paper. So let me just go across to the big wall and tell you what really happened. So SEBI is basically asking mutual funds to cut costs for investors, really. So this is basically what they're saying. This is the crux of what they're saying. And let me explain how SEBI plans to implement this. The consultation paper came out yesterday evening. So what SEBI is saying is, whatever is outside of the total expense ratio is basically the money that mutual funds make. Whatever and what is charged to investors. SEBI is saying things like transaction costs, which is brokerage, etc., taxes that you pay to the government, which is charged over and above the base total expense ratio. You bring all that within the TER. Total should mean total. There is nothing called total plus plus plus. Total expense ratio should include everything. Now, the way it's going to do this is that it's proposing new expense slabs for equity and non-equity AUM. The silver lining is that it's allowed the TER, the total expense ratio, to go up a little bit. The fear was, and by the way, this is not new because the SEBI chairman has spoken about this. There have been news articles. It was much anticipated. The fear was that AMCs would be asked to subsume a lot of these additional charges within what they were charging, which is not the case because TER slabs have been lifted a little bit as compared to earlier. I'll get to the percentage levels in just a bit. The other important change is that the slab will be at the AMC level and not at a scheme level. So a scheme can have, say, 2,500, 3,000 crores in assets, but it will not be, the AMC will not charge according to that slab. It will charge at the overall equity AUM level of the AMC, and that is important. Another interesting thing, AMCs have been given the option. This is, of course, a suggestion. Feedback is sought. They can set up terminals, trading terminals in their own offices and deal and execute their own trades. This is as a counter to mutual funds who say that, this will mean that we have to spend more, we can't charge. They're saying, well, trade on your own, don't go through brokers and cut costs. I don't know how practical that is. And they've also introduced the concept of a variable performance-linked total expense ratio. Again, a suggestion, something to be debated, deliberated upon. They're saying that you've got 12 days to kind of send in feedback. So 1st of January, 1st of June is when is the last date to send feedback in. And after that, in a graded manner, within 6 months, all these proposals will be implemented. Let's have the first table, which will tell you how this works, right? It looks complicated. It is not. But basically, the ceiling, the maximum total expense ratio that mutual funds can now charge is 2.55%. There you go. It was earlier 2.25%. So 2.25 has gone up to 2.55. And as the size of AUM goes higher and higher, becomes bigger and bigger, what you can charge becomes lower and lower. Makes sense, right? This is a non-linear business. Costs don't go up as the AUM goes up. So this is basically the first table I wanted to put out. SEBI has made an estimation of what this will, what the hit for the mutual fund industry will be, if you can have the next one up. And that is 4.5% in percentage terms at an industry level. This is the total hit that the industry will take. And then I want to just put out another table, which SEBI has put out in its paper. This is, they've taken 5 cases. The second column is for example, if one AMC A is charging 1.8% in total expense ratio, under the new rules, it will become 1.64%. The drop is 9% and so on and so forth, as you can see. These are hypothetical cases that SEBI itself has put in its discussion paper. Now, these are also listed companies, right? AMCs themselves. And CLSA is estimating that assuming no pass-through for companies like HDFC AMC and Nippon AMC, this will be the impact. If you assume some pass-through, which is mutual funds will ask brokers to share some of the burden, distributors to share some of the burden, the impact will be lesser, but there will be impact nevertheless. Let me actually throw it across to